Good morning, good evening, everyone, depending on where you're in the globe. I'm Anir Chaudhary, Policy Advisor of the A2I program of the ICT Division and Cabinet Division of the Government of Bangladesh, supported by UNDP. And I welcome all the distinguished panelists, participants, organizers of Financial Inclusion Week 2021. The theme of Financial Inclusion Week this year is promoting prosperity in an era of uncertainty. Uncertainty has become part of our life due to the pandemic and due to technological revolution as well. The impact of COVID-19 is reshaping the way we used to think about our financial capability. Only 39% of Americans can manage emergency funds of $400, and the US is one of the richest countries in the world. As expected across sites, citizens in emerging economies are struggling more to be able to access funds for an unexpected need. A study by Gallup shows that only 7% of Bangladeshi citizens feel secure about their financial capacity. Traditional measures of financial inclusion often reveal little about the financial health of a society. Development communities have been insisting to prioritize financial health and thinking beyond financial inclusion only, since the concept of financial health refers to an individual's financial situation holistically rather than only creating access and accelerating usage. This session will attempt to cover where we are standing right now in the financial health context, especially in the South Asian countries, and how developing the financial health of citizens can support creating an overall impact on the economy. We have four distinguished speakers and panelists today. We have Jasprit Singh, who is the global lead of financial health and innovations at UNCDF. Jasprit has been working on the area of financing and innovations to drive financial health and well-being agenda globally. Established the Financial Innovation Lab at UNCDF to unlock innovative solutions and business models which could be scaled across Asia and Africa. He worked in an advisory role in space of digital finance and inclusive finance to various international organizations such as the World Bank, the UN, IFC across Asia, Africa, and Pacific on a variety of engagements ranging from product to strategy. We have Ms. Humaira Azam, Managing Director and CEO of Trust Bank Limited in Bangladesh. Humaira is the Managing Director and CEO. She is the first ever female banker in this role in the commercial banking industry in Bangladesh. In 50 years, she has successfully led and worked with different teams over the last 31 years and delivered excellent results. We have Mr. Akshat Pathak, who is a country program manager in Vietnam for Microsaved Consulting. Akshat has over 12 years of hands-on experience working in the financial services sector, spanning public financial management, SME banking, digital financial services, and alternative delivery channels, fintechs, and microfinance domains in Bangladesh, India, Kenya, Malaysia, Nepal, and other countries. Currently, he is managing Microsave's I3 program in Vietnam. Last but not least, we have Krishna Thakur, Director of the Asia region at MetLife Foundation. Krishna leads MetLife Foundation's philanthropic work in the Asia region with a focus on building financial health of low to moderate income communities. Krishna has 15 years of expertise in working closely with some of the leading banks, fintechs, governments, and NGOs across the region in advising and working with them at the intersection of digital transformation and customer centricity. Let me start by inviting Jasprit Singh for the keynote presentation, Financial Health in South Asian Countries, Improving Citizens' Capacity to Become Financially Resilient. Jasprit, over to you.
Thank you, Anil Bhai, and good morning, good evening, everyone, wherever you're joining from the globe. Uh, I think Anil Bhai gave the entire context of why we are meeting today on this call, and it can't be done any better, because we are living at a time when the world is going through a very different phase where we keep on talking of achieving various inclusion objectives over last year or decade. We have done great progress in terms of how inclusion agenda that at least shaped the last mile infrastructure development or providing access to services to a large majority of people worldwide, especially the low and moderate income communities. But I think coming back to the same question in terms of uh, access for what, I think becomes the core and heart of this conversation today on financial health, and why it is so relevant for South Asia market, because within the inclusion of goals, South Asia has been one of the key drivers, the South Asian market overall, in terms of achieving those infrastructure, addressing the barriers, and creating that last mile access. But why are we really talking of financial health? Why is it really important? Because inclusion has been done. People should have automatically been able to improve their financial lives because they have access to the right products and services now. But but why is that not the case? And possibly that kind of really brings us back to this question of what is a vision of success really, right? And I like to speak it from a consumer perspective. Anil Bhai gave share some stats with us in terms of how US being such a developed market with almost near 100% financial inclusion, but still a large majority of US citizens really struggling to come up with emergency funds if they have to today, right? And they are not prepared for events like COVID-19 or emergency shocks, which can get you to lose your income or job or anything else for that matter. And possibly the question we need to ask ourselves is the way we have kind of been going about delivering on the inclusion goals and vision, was that sufficiently chartered to address the financial lives of the individuals that we want to serve, or was it really aimed to deliver a certain product or service to the market? Not to say that it is not important. It is absolutely important because financial inclusion lays down the foundational infrastructure of how uh, the world would be able to move towards building resilience or security. And we have seen good examples out of it, right? Just because people had bank accounts during pandemic, governments were able to transfer millions and billions of dollars in the hands of people without too much of time and effort. I think it kind of unlocked the entire process, but that on its own might not be enough to make people financially healthy or well-being for that matter. And I think from a consumer perspective, that is what is more important. They are less interested in terms of getting a bank account or an insurance product unless until they can deploy it for the right things and for the right purpose. And possibly this is where this conversation of what does financial inclusion plus should mean, that means financial health, what does it contain, and why it is so important this point of time. Just to really think of it in context, there's one end where we say that financial inclusion goals have been meeting, and but financial health goals have not somehow. There's also a strong case to be made that just because a country is progressing just beyond the financial inclusion numbers, right, in terms of GNI per capita or GDP growth and all of that stuff, that also does not translate into a healthy financial life for their citizens. Okay, US being that glaring example, I'm using one of the examples from one of the Asian markets of Malaysia, where 18% of people are unable to save. If 20% people need to borrow for purchasing essential goods, and 36% of the people are not able to come with emergency funds of 1,000 ringgit, which is almost equal to $250. If they are asked to do it today. So the country's economic growth also does not really have a direct influence on how the financial health of an individual will basically shape up. And to say that it's not only linked to the idea of that financial inclusion is happening and access is happening, and that's okay, we are not getting financially healthy, but also the fact that economic growth is happening, but still we're not getting financially healthy. So there's a missing question over here in terms of what does it mean to be financially healthy, and what will actually make people financially healthy or better off from where they are right now. Financial health is a very umbrella term. There is obviously no shared global definition of financial health. There has been many attempts being made over last couple of years, starting with developed nations in terms of trying to figure out what financial health should be. There's some consensus building now in terms of what that should look like. There are four outcomes which basically define what financial health should look like: the outcome of financial resilience, the outcome of financial security, financial control, and financial freedom. And to say that individually these outcomes are what make made up this umbrella term of financial health, and each of them are important in their own context, and we'll come to that in a moment. What I show to you over here is a financial resilience map, not the entire financial health map situation of the world, but financial resilience map based on one singular indicator, which is if a person has to come up with emergency savings within a 30-day period based on 1/20th of GNI, what will that look like? The earlier stat that Anir Bhai shared around US, or the one that I shared with around Malaysia, this tells you a worldwide story in terms of what the situation will look like. And these are some of the most developed markets in many ways in terms of being able to include a lot of people, but also lay out good infrastructure which can create the last mile connectivity in a way. But possibly there is a step which has to be taken further in order to not only bridge that connectivity gap, but make that connectivity more relevant to the people that we serve. In South Asia, possibly, which has been one of the key drivers for financial inclusion efforts globally over last decade or so. Uh, we can clearly see that while a lot of good infrastructure progress has been made, accounts have been pursued, there has been a lot of usage of account adoption taking place, but still, financial region is something that varies from market to market within the region. People often, we are still seeing, depending on informal sources, and not to say that one cannot go to informal sources to be financially healthy. There is always that broader context of financial health over here, but there is a whole lot of difference that that we see in the Asian market, because we have been too much focusing on our achievements till date in India, that we have been able to get to some X number of bank accounts and the last mile population, but a large part of accounts remain dormant. Or even in places like Pakistan or Bangladesh, I think there's a huge gap that still needs to be exist in terms of how do you make those products and services relevant for the people. And I think that's where this entire shared understanding on financial health becomes all the more important. There's a great saying: if you can't measure it, you cannot achieve it. And possibly that's where this complexity around rather, this focus on financial inclusion took its shape because of that fact, because it was easy to measure financial inclusion with a binary perspective of yes or no. We know how many accounts we have opened up, we know what's the volume of transaction that is flowing through the system, but it was difficult always to measure financial health. Okay, and that's where somehow the objective or the vision of financial inclusion, which was set almost 15 years back, got lost in that process, because we got too focused on achieving numbers or driving numbers, but less focus on how that basically is helping individuals in our community or in our markets be better off from where they are. And that's where the challenge around financial health really stems comes in. And these four outcomes, which we spoke of earlier, can be then start looked into that. Okay, how do you go about measuring them from from the perspective of these four outcomes? And I'm sure we're going to talk about that in today's conversation as well. So I'll not spend too much time on this, but I think we'll kind of unpack the idea of what measurement could look like during the panel conversation. Just to also be clear, what financial health is not. So we often get too confused that, oh, are we talking of financial health in a very new way? Is the financial inclusion goal that we have been pursuing for a long time redundant? Not at all. you know Financial inclusion lays out the foundation of financial health, and now what we build from here becomes what will the world look like in 10 to 15 years time frame. What drives financial health? Possibly behavior. uh, there can be lot of ways in which we can talk and discuss about this, but certainly financial health is not a new concept or a new panacea altogether. It is building on the success of what we have already achieved as a global world till date, and possibly we need to start looking at it in that lens. This requires a lot of call for action, measurement being one of them. So I would, sincerely hope that we basically are able to move in that direction over next few years. And I think CFI's Financial Inclusion Week is a testimony to that. We have so much conversation going on financial health over since yesterday, that it seems that this topic, at least, or agenda, is somehow finding spotlight with the right set of actors globally. I'll stop at that and hand over the floor back to Anir Bhai.
Jaspreet, thank you. I think that brings a lot of clarification to what financial health is all about from a national perspective to an individual perspective, from a perspective of the binary that you talked about. Yes, I'm included or not, I'm not included, to in a sort of a spectrum of health. I mean, as we think about health of a person, I think there is a spectrum of health, right? So are we healthy? What does that mean? If am I healthy if I am overweight, right? So am I healthy if I'm malnourished? So I think there is a spectrum. I think we really need to talk about. So thank you for that clarification. So that will, I think, give us a lot of food for thought for the discussion today. So let me go to Krishna uh, with my first question. And I'd like to request that we limit, in the interest of time, the answers to 3 to 4 minutes, perhaps, so that if there is audience questions, we can take them at some point. I'm sure some questions may come in. If not, we'll be having the conversation just by ourselves. So, Krishna, financial health offers a more comprehensive perspective that we just saw from Jaspreet's presentation. A Gallup study showed that while financial inclusion in Kenya increased from 75% to 83% between 2016 and 2019, the percentage of adults deemed financially healthy declined from 39% to 22% in the same period. Quite interesting. Ensuring access and usage is not enough for citizens to assemble an emergency fund. So, what is missing? What should government and private sector concentrate to bridge the gap?
Anirbhai, thank you for asking that question. Just read great presentation to set the sort of tone of the conversation. And Anirbhai, glad that you sort of raised the difference between the gap between access usage and outcomes, right? So we've discussed that in the past, and and similar data outside of the Kenya domain as well. Even the Gallup study in Bangladesh, there is about more than 50% Bangladeshis who are financially included, and even a lot more if you consider digital wallets. But only 7% Bangladeshis feel they are financially healthy or secure. So significant gaps. Malaysia, is just we shared some examples, but they have one of the lowest savings rate in all of OECD countries. If you remove their compulsory savings, government mandated savings, it's almost negative. Now, all of these are really real causes of concern. Uh, and to your point, I think I'd like to quote you back one of the previous discussions where we were having Anirba. You kind of, I think you mentioned somewhat amazingly well, where you said we're hitting all the targets but missing the point, right? So I'm quoting you back on that, and I used that. Quote you when I use that. But it's a so what can we do, right? I feel I'm just alluded on a couple of things, but let me just summarize 4 points, right? I feel that the government has to set the tone, right? They set the tone for the private sector and the industry to follow, and they could do four things around it, is simply putting. The first one is just clarity of purpose and intent. Right, having bold, ambitious, and clear goals. Clearly, when you, as you think about it, and what Jaspreet was saying, people need help, not accounts, right? So, and then the government's goals, financial, and if you see what's being talked about and measured and discussed, it's all about accounts. How many accounts do we have? How many loans do people have? Now, as we all agree that these are all essential things, but those that cannot be the purpose of our being, right, of our, the reason for our existence. So the purpose, I mean, call what you may, financial health is just one way to describe it, but terms don't matter, right? The purpose is whether low income people are financially healthy, or have decent, are able to cope up in terms of financially, in their financial needs. So So I think, it starts with that, right? Being clear that, our focus is improving financial lives and health of low income, moderate income people around the world. And once, I think, even that sounds very basic, but even that sets the tone, right? That here is what we are looking at. And then, as the speech said, let's look at measuring and understanding and providing these measuring and understanding financial health, what that means. Whether is it, savings is an issue, whether pension is an issue, whether protection is an issue, and how do we all bring it together for a person, and then share these insights broadly and widely. A lot of countries, it's just we struggle to find data, and we have to commission surveys to just get it. And so a lot of the times it just doesn't exist. The third part, an important part, is once you have clarity of purpose, once there is sort of an understanding and insight around what financial health means, it's enabling digital infrastructure and common standards as shared public goods. That's also essential. I think we must start considering digital infrastructure much like we consider physical infrastructure. Like, for movement of goods, we need roads, hospitals, and schools. Much like that, there has to be sort of a common standards and a shared framework around how we use digital infrastructure. Uh, and governments need to play a greater role in that. I think Bangladesh, and with your leadership, I know you're working on a lot of things like interoperability and stuff like open banking. These are extremely essential things, I think, for private sector to then come and innovate and offer solutions. And the last part, and I'll conclude after that, is once you have those, it's kind of three things, right? Clarity of purpose, measurement, and digital infrastructure. Then it kind of lays and gives you the platform to design an enabling policy environment around ease of doing business, around creating an investment in or investor friendly climate, and support partnerships. And again, what you're doing in Bangladesh around FinLab BD is a terrific example and a significant step in that direction. And once you have these kind of enablers in place, private sector, I think then it makes it a lot easier for them to innovate, to use data, to design the right solutions. And for them, I think the way I see financial health from a private sector perspective is is the gold standard of customer centricity. Uh, yeah, I'll conclude here. We can discuss more as we go, but
Krishna, thank you. Thank you for that, for those 4 points. And of those four, I think the digital public infrastructure, right? What does that really mean? And I want you to think about it, and then I'll come back to that. So that's an important thing. So when we talk about digital, or rather physical public infrastructure, we sort of understand that, and we live with it, grown up with it. But what does digital public infrastructure mean? And I'll come back to that. So let me go to Akshat. You have experience in developing countries like India, Nepal, Vietnam, and East African region for the underserved, low and moderate income communities to help them better manage their financial lives. Can you share with the audience about notable initiatives that helped to improve financial health in that region?
Thanks, Bhai, and it's great to be part of this panel. I think Jaspreet and Krishna have set the tone straight. People need help, and they don't need accounts. They don't need mobile wallets, right? So I'll just try to start from a broader construct. So if you look at these developing countries, they share a lot of similar traits, right? So these could be challenges if you look at from one perspective, and this is also an opportunities for people like us. So if you look at these developing countries, I mean, you'll find that there is a high contribution of the informal sector towards the GDP, towards employment. There is low to moderate participation of women, both in labor force as well as in terms of small businesses. Right? There is an inherent preference of cash. There is a significant digital divide. People feel that they are financially secure, but if you look at the Gallup survey, which Krishna just mentioned, I mean, these countries, they really do have low financial well-being score, which has been reported, right? In general, the government has been able to focus on financial inclusion through NFIS, National Financial Inclusion Strategies. But as Krishna mentioned, I mean, the goalpost has always been around creating more accounts, right, rather than making them relevant for the people, right? So in this broader construct, so what we have been able to do at two levels, Anir Bhai, has been to work with community organizations, which includes the private sector and the public sector, to help the low-income customers build a strong financial future by giving them choices to plan for their future, to protect their future. And at a community level, we are helping with a mix of institutions which include both the incumbents and the startups. So I'll just limit myself to 3 to 4 examples. So I'll begin with an example from Tanzania. So we've been working with refugees in Nyaragusu camp. These refugees, they are basically from they're Congolese and Burundians, right? And if you're born a refugee, you never are able to move out of the camp. So what happens is that, I mean, most of these refugees will never be able to access formal financial services in true shape and form, which other Tanzanians may. Our work over the last 12 to 16 months have been all around coaching these refugees so that they, first of all, understand, I mean, what are the financial choices that they need to make for them to secure the future, right? And for this, we have looked at financial access usage, and we have also been focusing more on financial health in terms of what choices would be relevant for the future, for the current generation as well as the children. Right? So that is one example wherein we are trying to create relevant awareness around usage of relevant financial products and services. Second example, I'll quote from the country where I currently work. In Vietnam, we started working with Momo. Momo is one of the biggest wallet player. When we started working with them, they had close to 8 million users. Right now, they are sitting at 25 million registered users. So there's been a substantial growth. So, and part of the growth from comes from the LMI community because, again, I mean, there's a similar characteristic that 60 to 70% of the population are usually the LMI population in across these developing countries. So Vietnam is like no different. So with Momo, what we've been able to do, we have been able to use Momo, convert it into a distributor, work with the incumbents, and customize ticket size financial services in terms of insurance, credit, and now savings. Last example, which I would like to quote, is from Bangladesh. So we have a history of working with Shakti Foundation, and we have been helping them on their loan products. But over the last 12 months, what we did, we also started working on a savings product. So Shakti had ceased to offer savings, but they were very well aware that the customers need an avenue to save the money, and which was not available. So with partnership with Shakti, we've been able to develop 2 to 3 voluntary savings product, and we are happy to see the success around it. So right now we have around 350,000 women who have been able to access voluntary savings offered by Shakti. So yeah, in a nutshell, I mean, these are some of the initiatives where, and I'll be honest here, so we haven't been able to change the financial health of these individuals, but we are in the right direction. At least we are aware of what would be relevant for them. Yeah. So I'll pause over there.
Thanks a lot. I think one important point that you bring out is diversity of products, relevant products in the context. I think very, very important. And that brings me to Humaira. And let me talk about products because that's where you sit. So financial service providers can actually create an impact to citizens' financial health. And we've heard from Akshat about some of those examples. Health insurance providers can solve the sudden out-of-pocket burden of health-related expenses. Banks and fintechs can offer quick loans with the help of digital credit scoring so that a person can avoid taking loans from informal sources with very high interest rates. How can financial service providers strategically offer innovative products and services in terms of design and delivery by considering the status of financial health to improve the financial well-being of citizens with a specific focus on lower and moderate income people? Ms. Humaira, please.
Thank you. What has happened in Bangladesh? Yes, I think the major change happened with all the NGOs already being in the market, and they developed a model basically to both for savings, I would think, because there was a system of members saving, as Akshat has rightly said about Shakti Foundation, and BRAC is the largest, and there are many more. So obviously, TMSS and all that, they have a huge outreach as far as the population is concerned. And the good thing about is, I think there is a major inclusion of the women folk in this special arrangement, because for both microfinance, the key thing they realize that women are more, I think, social in nature. They look after their family. Their urge of saving is already there. But that model, of course, it has got a high interest and all that, and they borrow from there. And there are different factors involved there. But government moved, as a matter of fact, to try and change that scenario. And we banks were actually, initially, I would say, rather, it was forced on us, sort of, I would say. But I think that was the best way to go about it, because affirmative action is always required to do something which is tough. So we also had these farmers 10 taka, 15 taka accounts, but that is not making a major impact, because at the end of the day, we really need to make a major sort of investment. There are MFSs like Bcash and all that, and they have like 50 million customers and all that, and active customers of 27 million and all that, and a good payment platform. But as far as the other diverse products are included, those where I think those are not very much developed, because also the model that is necessary, also the module for lending to the poor that is there, and the structure and all that, and that is now is at a very limited scale from the banks, because it should have been because if you look at the structure for the small women entrepreneurs, those who are there, there are platforms now, they can use it, they are doing their sellings there. But when it comes to bank finance and all that, yes, central bank has come up with regulations, and you can go up to 2 million clean, and even more clean for 5 million and all that. And they also are now putting up circulars for allowing us to go for equity financing for small ventures and all that. But I think the products those were necessary to support that, that has not successfully come up so far. So that's what I am seeing in my sphere. Because if you look at the equity part of it as well, banks can have a pool, because they also understand. And I think they should, because now there is a there is a circular which says that up to your total profit 1 or 2%, this needs to be kept aside for equity financing. So if you don't want to make a major loss, and why should it be a loss? Because banks are capable of understanding the requirement and developing the financial model that is necessary to work, to partner with someone. So these small investments in pockets, I think that will allow us to have a better management of portfolios, and being able to participate in different economic activities, especially with the women folk and all that. Because if I think about many years back, just to give an example, in the early 90s and late 80s, there were very few Bangladeshi entrepreneurs who were even in manufacturing. And I would think even the large local corporates, those are there in the market right now with billions of taka revenues and all that. They used to have exposures of like I would say 200,000 US dollars, if I remember correctly. So you can imagine now they have grown into billion, I would think in dollars, even $1 billion turnovers and all that. So I think there is a big opportunity for the people. What is so as far we can see that there is a big opportunity, and we are also investing right now. We also are having a joint venture with Malaysia, Asiata. As you know, we have gone with we have launched Trust Bank Asiata. So what we can see that we need to work quite a bit as far as financial products are concerned, because it's not there as much. We would like to see it, but it has not happened. That's the reality. And one other thing I would say that the clear guidance, or the clear state-driven whatever attitude or the goal setting, or that needs to be also, I think, further clarified. It is affirmative action again, and maybe needs to be pushed down. And because as I said, it's a question of investment as well, so we'll have to do the investment to be able to come up with the products and all that. So unfortunately, from my side, I can say that I can look at the banking sector, and I am not seeing the products those are necessary to move forward.
Swara, thank you. I think it's really, as C.K. Prahalad talked about in his famous book, the fortune at the bottom of the pyramid. So it may look like affirmative action in the beginning, but it's really the quest for fortune at the bottom of the pyramid. So what kind of products will be financially sustainable, not as just affirmative actions and CSRs, but really products that will make financial sense for the providers and obviously for the consumers. So I think that's what we need to look at, and the importance of equity financing that you talked about for, let's say, the cottage and the small medium enterprises. The question of valuation, I think, is important. How do you measure valuation? I think that's an inexact science, perhaps, and maybe an art, and something that we need to think about. So, question, maybe I'll come to you to think about that, because if you're doing equity financing, you have to be able to measure valuation of a company, and just by counting the chairs and the heads may not be enough to do valuation of a company. So I think that's an important thing. Let me come to Jasprit. There is a question that has come in: how do you measure financial health? But measuring inclusion, as you pointed out in your presentation, is binary. We consider whether someone has a bank account or an MFS account, or is he or she making payments or not. And these are the simple, I think, quantitative measures, right? When you're talking about health, I think it's as I mentioned, it's a broader spectrum. I mean, when we use the word health, not in finance, but health of a person, what are the measures that we look at? I mean, obviously, there are our doctors or our health system looks at things. But in financial health, uh, how do you do that? So we have seen Financial Health Network, Consumer Financial Protection Bureau, like CFPB, IPA, have come up with some measures, but there is no agreement from what I have seen, at least. So, what would your recommendation be to develop measures for financial health, especially in the context of global south? I think the context may vary
Yeah.
from the global north to the global south, but I think since we are discussing global south primarily today, what would some of those measures be? I think pointed them out in your presentation, but maybe we can hone in on that a little bit more.
Also, you absolutely right. When you say that, it's a broad spectrum from a health context, and I think you have to look in the same way from a financial health context as well. We spoke of the four outcomes, which basically encompass to be financial health, right? The resilience, security, control, and freedom. Maybe resilience, security are more objective in nature. Control and freedom can be very subjective in nature in terms of how you go about measuring it. But before you step onto measuring itself, what is rather more important is to prioritize. Okay, because financial health, while we can use this term in a loose manner again, but it is important to prioritize it, because from a country to country the context will differ. And what might be a focus outcome for me in a place like Nepal might not be the same for me in a place like India, or in maybe Kenya, for that matter. Right? Those outcomes will actually differ. It's like financial freedom takes you to the last outcome. Okay, where you say that you have achieved all set of goals and parts of life, different outcomes of life, and now you actually just try want to enjoy your retirement, and go out for vacation and things like that. Possibly it's a good goal to have, but maybe not less relevant for, say, a market like India or a Bangladesh or a Nepal at this point of time. Where we still need to kind of get the basics up and running, with resilience and security being achieved for our citizens at large, especially for the low and moderate income community. So the problem has always been with financial health that while there has been a lot of attempts being made to work on what a measurement could look like, we need to appreciate that first we need to also think of how do you prioritize at the local level, and then how do you localize within the market where you speak, where you're going to want to put the measurement in place, because they before we actually jump to having a indicator which is globally accepted and can be comparable across markets, there has to be a local part of those composite set of tools or indicators which can at least give within a market what the financial health or the various outcomes look like for the citizens. And possibly from there you evolve this entire process of finding that one common outcome which everyone can kind of focus on, say resilience or security. Maybe some markets will still focus on control and freedom and continue measuring it, but that's where the entire comparability at a global level really comes on board, but it starts with local and then go to global. The second thing around with financial health has been that who deploys it, basically who goes about measuring it. One, it's for thinking at a government and policymaker level. Yes, there's a lot of work which has now started getting done or in works, where experiments are being put in place to see how different outcomes can be measured from a policy perspective and what does it translate for policymakers. How do they use that to direct better policy decisions. At the same time, how the stakeholders, which are financial institutions, participate in that process of measuring the financial health of their customers, for that matter. Oftentimes, you'll hear institutions or banks, or insurance companies saying, why should we be measuring financial health for our customers? We are serving one product. They might be taking products from 10 different places. Perfectly, yes, that's right. And possibly there has to be a starting point, because you are sitting on a heap of transactional data which can tell you a lot in terms of how your customer is currently behaving or not behaving, right? You can at least start working on how do you shape products to fit the needs of your customers. There have been good examples of work being done, say by likes of Commonwealth Bank of Australia, DBS, and in BBVA and other markets, where they have actually been able to deploy tools to measure the financial outcomes of their customers and then offer them the services and products which will contribute towards improving their financial well-being in a way over long term, right? So I think there's a starting point for everyone. Possibly we have to contextualize the measurement in what we are trying to achieve and where we are trying to achieve that, and possibly there lays the answer of it, of how this actually could be rolled out in a global south context.
Great. Thanks, Jaspreet. So, who measures it? I think it's an uh, important perspective. So that gives us food for thought. Should the government measure it? Should there be a research organization, local or global, that should measure it? So I think we see rankings done by rankings on many things, right? I mean, competitiveness, innovation, e-governance, poverty. That's done by different research organizations, global and local. So I think maybe a combination, may be helpful. I think it's an important thing about who measures it. It's just, uh, I'll think about it more as I hear more of the answers. Uh, Let me go to Akshat again. The economic impact of the coronavirus outbreak makes it harder for many citizens to achieve their long-term financial goals, and this will likely continue to affect household finances for years to come. In your opinion, how badly did COVID-19 impact financial health in emerging economies, and how can governments, the private sector, and development partners respond to bounce back?
Thanks, Anirmai. I think all of us are very aware about what has happened across different sectors. I mean, and the emerging economies are have run the uh, like how should I put it? I mean, so emerging economies were already on a back foot before the pandemic happened. I mean, and this has actually set them back 3 to 5 years in many shapes and forms. So, uh, to make my response targeted, so I'll restrict myself to the study that we had conducted. So we had actually gone ahead and conducted research across 7 countries in Asia and Africa to understand the impact on individuals, small businesses, and women in particular. So as it is well aware that the individuals, they have reported that uh, the income has reduced substantially during the pandemic, and even as the economies have opened up, I mean they are still reporting that the income levels have not bounced back to what they were earning initially. However, on the expenses side, I mean things have become costly. um, if you look at the small businesses, I think they were the worst to be hit because they were already dealing with a lot of challenges in terms of access to credit, access to new age market linkages through e-commerce, right? For example, in Vietnam, we have multiple e-commerce platforms which are there as part of the social media platforms or even the chat platforms like WeChat, Lazada, Tiki, and so on. So uh, before the pandemic had hit the country, I mean, these small businesses had started marketing their products on these e-commerce websites, but due to the pandemic, I mean, they really saw a huge decline in terms of their revenues, right? They also had to face a lot of disruptions in supply chain. So, I mean, I can go on, but uh, there's one critical data point which I would want to mention is that women in particular had to bear the brunt, both as an individual and also as the owner of the enterprises, right? So there are multiple studies which correlate this fact that women-owned businesses, though had shown resilience initially, but then they were the first one to be closed, and there are multiple biases behind it. Uh, Even the access to healthcare for women has gone down. So, Mary Stopes International, they estimate that close to 10 million girls across the globe, I mean, they have lost access to basic healthcare services. So, I mean, the impact has been really spellbound. I mean, but if you look at what countries have done, so that has been remarkable. I mean, this would have not been imaginable, at least let's say 5 to 6 years back. So, Krishna did mention about open digital platforms. So, I'll start giving the example of India. So, in India, the government of India immediately announced a emergency cash transfer program, which was riding on an open digital ecosystem, which is set up by the National Payments Corporation of India. Using this open digital ecosystem, the government of India could reach out to the vulnerable citizens. But is that enough? That's the question we need to answer. And I think uh, going forward, I think such relief programs have to be more targeted. They have to ensure general centrality. The public and private sector can come around. I mean, for example, we are working with a host of startups in the country which have sort of changed their orientation during the pandemic and now as we are building resilience in terms of financial coaching, in terms of skill building. So I think there's a huge scope for the public and private sector to come around and work with the government, use open digital ecosystems to actually help these LMIs and other vulnerable communities to bounce back.
Thanks very much, Akshat. In the interest of time, I'm going to quickly go to other panelists as well. Krishna, let me come to you with two questions actually. One is the digital public infrastructure that you talked about earlier. So explain that a bit more detail. So what does that look like? I mean, we should be able to visualize it. We should be able to contextualize it. We should see a picture of it. So if you had a whiteboard, I would ask you to draw it, but we don't have one right now. So just give us a sense of that picture. Second question is, MetLife obviously has done a lot of innovation and supports innovation. So how would you, where would you support innovation here as far as financial health is concerned? Two questions for you.
Sure. Thanks, Anirbhai, for these questions. In the interest of time, I'll keep it brief and high level, but there is just a lot to unpack here. The first question on OD, on the digital infrastructure, right? I mean, I think the simplest way to begin thinking about it are just highways and roads. To for we all know there is so much happening in the technology and innovation space, right? Let's take a very simple example of even QR codes. For those who understand, I mean, are interested in sort of getting into the technology, right? There could be all sorts of different standards around QR code, and you could have a very fragmented ecosystem around QR codes. Another example from simply bank accounts or wallets, right? Like there is one way where you kind of just let everyone do their own wallets, and But unless there is a shared sort of set of standards, open API, an ecosystem where these wallets talk to each other, the utility of these wallets, to everyone, the financial providers, the clients, would be significantly curtailed or limited. Think of health data, right? Like we all understand that problem. I think it's so difficult for us to get our own data, access to our own data, and then simply because all of the hospitals store in their own ways. So that's to just understand, ground that problem, right? And then let's take an example of, I think, where India is conceptually headed. I think it's turning into a terrific learning laboratory. Of course, goes without saying that there are significant challenges for a size like India to deal with. But since the launch of Aadhaar, they've done some amazing work, right? The key paradigm shift has been, rather than building more siloed technology systems, India has embarked on a journey sort of to build an open set of digital ecosystems, right? Which includes data registries, protocols, standards for interoperability, something that you're also working on, and data exchange, which can be leveraged by the government as well as private sector innovators to roll out citizen-centric services. Uh, I'm trying to keep it short, but just think of it, India's take, how it began with a simple digital ID, which again Bangladesh also has, and then you created one of the world's best payment system, right? UPI, which is I think global standard around how payment should function. Uh, and it doesn't only stop at that. Then you could use a whole consent and data security and storage architecture, and you on the top of it, then it makes providing affordable credit to millions, hundreds of millions of people who had no access to credit so much more easier. And now there is this whole conversation around digitizing health data, and that can unlock, just having access to that data, even for users as well as for the industry, can unlock billions of dollars in value of finance. And you could do the same around education and skilling and whatnot. So I think that set of ecosystems, common standards, open APIs, interoperable standards across, not only necessarily financial services, but across our different pillars, it kind of connects, I think, the financial lives for people in all sorts of amazing ways. Yeah, I'll just. Do you want me to move to the next bit? I mean, again, there's just a lot here, but I don't want to take up all the time. Yeah.
Sure, sure. MetLife. Uh, so, in terms of MetLife support to the whole ecosystem, what? So, let's say if you have to support Trust Bank, uh, maybe through competitions. So, Trust Bank being one of the competitors, obviously, you'd open it up to uh, different types of startups, fintechs, all kinds of people, right? What would you do?
Right.
What would
So I
your
mean,
challenge question be?
right. So we simply begin with kind of like, as you said, what are people struggling with? That's the simplest question, right?
Okay.
And that could be different things at different time for in different contexts. So, for an example, pre-COVID, a lot of our focus was on building. I think it is under discussed, but again, very basic. But somehow people don't discuss it much because it's basic, right? The biggest indicator of financial health is habit of savings. UNCDF's work in Malaysia has proved that some entirely different work, Canadian government and their payroll agency has proved that it is clearly not about how much you save or how much you earn. It is simply about habit of savings. To build, I mean, just that habit is the clearest and the biggest indicator of financial health. Is that so? Pre-pandemic, there was a lot of focus on us helping people build emergency savings, long-term savings, and whatnot. And then we would look for the right solutions who are doing that. How do we create sort of how do we bring together partnerships with startups, with reputable banks like Trust Bank, and and use behavioral science to sort of to support that. Post pandemic, this whole sort of trust has there is a bit of a break in trust, right? Like people, the banks and institutions are nervous. So now
Right.
credit is back in focus. How do we ensure that sort of the credit system is oiled and well functioning? So we're working on guarantee funds and stuff like that. So it's very contextual, but again, we start with the problems that people are facing, and how can we bring together the sort of power of innovation, behavioral science, and partnerships
Right.
to bring those solutions for. Yeah,
Great.
I'll
Thanks, Krishna. Let me go to Miss Humaira. So we talked about products. Do banks understand the needs? Krishna talked about understanding needs. Uh, are banks sort of comfortable in their current revenue mode, and may not. I mean, what I see is that I sort of make a contrast between the way banks think. It's not function; it's really thinking, and the way telcos think. There's a fundamental difference. So banks think with about large customers. That's how the money is made, and telcos think about small customers. That's how money is made. So can banks change their thinking pattern to focus on perhaps needs of the LMI communities as we've been discussing, and particularly focused on women perhaps because you actually stressed women in your first answer.
Um, I think the change has already happened because you have now the agent banking models, you have sub branch models, you
Sure.
have DFS. So also the banks are having these joint ventures because they also want to be in that space. Because a good thing about Bangladesh is it's a small land, very flat land, and the outreach could be absolutely available for anyone who wants to reach out. And the population also makes all the sense because it's about now 170 million. So when it comes to women as well, when we look at the garments industry, they all it's like 5 million people working over there. So if you look at it, what happens is they have already gone through the COVID situation and all that, and their salaries were delivered through electronic platform and all that. So I think they got a sense of it, but the disadvantageous side is the literacy part of it, I would think, because unfortunately women are always at the back seat as far as education is concerned, or even giving any sort of advantage. Like even we can see that amongst the mobile subscribers also, when it comes to the women folk, they usually get to use the mobile phone of their husbands or brothers or someone from the family. That is the disadvantage part of it. But and also the question of the moment you call about DFS and all that, the model is based on certain literacy. So it's knowing the numbers, and it's a question of the phones, what sort of language you are looking at. It's English basically. So what happens for them, whether we have actually allowed them to get to understand the language, to be able to use it. And product wise, I think we are also, we understand there is a huge scope of a small loan. Like India has got a model, Kotak has been doing it, and some other banks are also doing it. Like they have like 200,000 taka, like it's like $2,000 sort of investment in putting up a house also. So these sort of different models, like you can do it for their education, that if you are actually doing the education part of it and you know where they're going to work, where they'll have a basically steady job, and they should be able to pay off your loan. So you can actually model a lot of small products for them. So it's a question of, and only the thing is it has to be in electronic platform, because banks do not have that kind of infrastructure like a microfinance agency or someone like
Sure.
that. So definitely it's a question of initial investment. That's what I was talking about at the beginning. So product wise, I think there is a huge opportunity, and it could be in different fronts, as I said. And even equity wise, when you are looking at a very small firm and very small amount being spread, so you don't have to do much as far as the valuation side of it is concerned. If it was a major one, or even I would say SME, and by definition how you are putting it up, that's also a question. So what we can say is there is huge opportunities. And as far as the women is concerned, they have been in the front of saving for many years, so that gives a big advantage. They think about the health, they think about the insurance, they think about the even mortgage loans, they think about buying a little bit of land and properties. So if you think about the psychological and physical aspect of it, I think they are more attuned towards actually managing the wealth much better than a man the other half. Okay, so I think
Right.
it's a, yeah. So obviously this is a big positive I am looking at. But as I said, that it's a question of how much investment we are going to make, how quickly we are going to make. We have made a big investment, and we are also thinking that what we can come up with, and I think we want to look at different models, but I think Bangladesh is a better place to look at the models because they have come up with quite a few things. But now all we have to do is to further improve and move forward.
Great. Thank you so much, Mr. Myra. Just
Mhm.
last question for you. Uh, Basically, looking at maybe proxies. So one of the things that we're looking at in Bangladesh, based on an experience in Togo, is to look at telco usage as a proxy for poverty. So maybe developing some kind of poverty index, because it it is it is not accurate, but it's good enough of an approximation that we can use that, and it's very dynamic. It's real time. You can actually track it instead of doing surveys and then waiting for 6 months. You're actually tracking on a day-to-day basis, perhaps. So tell us about whether we could think about proxies like that for financial
Um,
health. I mean,
uh,
question to Jaspreet.
we,
Mr.
I
Mara, do you
think
want to come in also?
we are
Let's
talking about
Sure.
big data and all that. So, as far as the big data is concerned, unfortunately, Bangladesh needs to do much more in the data front. That's for
Sure.
certain,
Sure.
because that is going to give you the basic understanding and usage pattern and the balances and average balances, how their behaviors are, and all that. So, if we want to get on that course, I think we have to first put it in place.
Sure.
We have done UDCs and all that in every corner of the country, but I have not really seen the UDCs function so far, which could have been much better, which could have been a big, I think, support for any of the financial institution to be able to incorporate anything. And telcos are also restricted, as you know. And right now, whatever model we want to use, it has been a mixture, and there are technical glitches and all that. So I think when it is removed, I wouldn't say that. Let's see how the policies are going
Sure.
forward, and we can definitely adopt that.
Great. Thank you, Mr. Myra. I think we are going on borrowed time right now. So we have maybe just 1 or 2 minutes,
No,
or just maybe a minute or so if you could take.
I'll just say 30 seconds on this, but
Sure.
no. So I think it's a good idea to use surrogates where possible, and possibly you refer to the telecom data to at least measure the poverty index, or at least putting that in context. But I think the way we are seeing financial health outcomes and the indicators that have been part of it,
Hmm.
it needs to be a little more broader than that. Okay, it needs to kind of be looking at the aspects of people ability to plan on day-to-day basis, right? It needs to be looking at aspects like the ability to come up with savings and so forth, which telecom data might not be sufficiently be on its own be able to provide, but yes, it can be one input into the composite set of indicators that needs to be brought together, or be used to at least measure the end outcomes at the citizen level.
Great. Just with thank you. I think good food for thought for on that. I'll try to summarize. I think it's a difficult task that I have. I mean, such a rich set of thoughts and reflections and experiences. It'd be difficult for me to summarize, but I take away 4 points today from this discussion. The first is, I think, a commonly agreed set of indicators of financial health will be helpful. So globally, at least for the global south, I think even if we cannot sort of look at it globally, but at least global south, maybe with additional country-specific indicators. So maybe a common set of indicators, and who works on it, I think we'll all have to work on it. It's not just one organization or one government doing it. I think we may have to put our heads there. Second is the digital public infrastructure. We need a picture of it, a very, very good picture of it. And we need a strategy to get there, country by country, because I think each country is different. So having that picture and saying that where am I in that picture in terms of my maturity of digital public infrastructure, and getting to that point, maybe a health of that digital public infrastructure is also something we should look at. So what is the baseline? Where do I want to reach? So a picture, a target, and then a strategy to get there. Third is product experimentation. I think is very important. So again, a lot of it is learning by doing. So what India has done with Aadhaar and UPI, it's really learning by doing, right? So there was no grand uh, sort of blueprint. So the blueprint was done as it was, being learned. So I think experimentation is important, and a policy environment that enables that. And the point that Ms. Humaira mentioned in terms of data, so that's important. So maybe a data repository that allows experimentation, a sort of a sandboxing, that would be helpful. And the last is, I think, obvious, is collaboration. So banks alone cannot do it, MFIs alone cannot do it, telcos alone cannot do it, fintechs alone cannot do it. I think it has to be a mix of organizations, mature and the disruptors, uh, incumbents and the startups. I think we need to see that, and the regulators and governments need to enable that. It has been a fascinating discussion. I really thank Jasprit Singh, Humaira Azam, Akshat Pathak, and Krishna Thakur for your very insightful remarks and reflections. Thank you very much, audience.
Thanks,
Thank
Thank
everyone.
you very
Thanks,
much.
Anirudh. You
Yes.
Thank
summarized it
you.
well than we
Have a
said,
nice day.
better than we said.
Stay
Thank you.
safe.
Bye-bye.
Thank you.